main story as far as Wall Street is concerned and the ongoing banking crisis, because right now we're seeing big cuts come in on Wall Street. Now we understand, as far as First Republic is concerned, 11 of the biggest U.S. banks overnight have announced that $30 billion rescue package for First Republic Bank. They're trying to prevent it from becoming that third bank to fail in less than a week. You had SVB, then you had, of course, Credit Suisse, and now you have First Republic as well. So now let's just get perspective on this. Manish Singh is joining us to lend us help in understanding what could possibly happen next. Immediate pressures on Wall Street, Manish, is a given. There is no taking away from that. But are we, in your opinion, handling the banking crisis better with what the central banks are doing, some of the lead banks, like what Swiss National Bank has been able to do, and now what we're seeing, the conglomerate of banks coming together to bail out First Republic? Do you think we are handling this crisis better?
Hi, Vikram. U.S. definitely is handling it better because you saw the resolution that happened over the weekend in terms of guaranteeing deposit was a good one. And when that happened, because it was not a bailout, so nobody should be surprised that Silicon Valley Bank has filed for Chapter 11 because clearly they don't have enough equity to continue. So I think that's a resolution which was expected, and it has happened very quickly. What we are not seeing in Europe, and at least in case of Switzerland, is that I guess it's down to the size of Credit Suisse, right? They have a much bigger asset base, 54,000 employees. So I guess it gets a bit more political. I've heard news that both Credit Suisse and UBS are resisting any forced merger. So it's not as straightforward. But ultimately, if push comes to shove and they have to do a resolution, because I am guessing, and I don't have full information, but the deposit in my guess will continue to leave Credit Suisse if you have question. And at some point, very quickly, it will become that bank as a unit in terms of the equity capital is not viable. And then the regulators will have to step in. Now, that could be the way it goes out. Now, bear in mind that Swiss National Bank has a lot of assets on their book. I mean, they hold $139 billion of U.S. equity. So they do have enough firepower to resolve this. But this is Europe and Switzerland, and it might take longer. But in Europe, U.S., I think they have handled as well as they could, and it was done in a very swift manner.
Well, the bond markets are rallying, and that also is to be expected. But Manish, do you expect any kind of consolidation that is going to shake up the markets? Is that likely to happen? You did mention that politics will come into play, and perhaps in times like this, that too should be factored in. But in case that kind of huge consolidation happens, how are the markets going to treat it?
So the way I see that, consolidation, when I say consolidation, I mean that you will see smaller banks close down or not be viable and assets move to bigger banks. That's definitely going to happen in the U.S. because if the bigger banks are paying higher insurance costs with FDIC, they do not want the bad banks or smaller banks to continue. So I think that will be the natural outcome of where things are going to be. Now, a clear thing that may happen, and let's see what Fed does next week, is for Fed to cut rates. Because when you cut that rate, then a lot of these investments will look much better than they are at this stage, because it's clearly you bought something at 1.65 yield and now it's yielding 5%. And if the depositors do not deposit money in the bank and go into money market instrument or other things, then that also puts pressure on a lot of these banking operations. So in my opinion, as I've been saying for a long time, that rates have gone too far, too high. It's not sustainable, and everyone will look at what the Fed has to do. And if the Fed raises rates next week, which it could, given where the inflation number is, then I think this is not going to go away, and it's going to force Fed's hand eventually, and you may see that. But for now, fact that they have said that the banks in the U.S. can offer the securities they hold on the book to the central bank at par or to FDIC help, that is going to resolve the issue temporarily and medium term. But the longer term issue is about yield, it's about interest rate, and those interest rates have to come down.
That these interest rates are going to remain high, and they're going to remain high for a longer period of time. In that sense, what do you expect the Fed to do next? What, as far as expectations of the FOMC meet, where exactly are you pegging them, and where are you seeing the terminal rates at, the peak rates, and how soon do you think we'll arrive there?
Sure. So look at what the market has done, right? Last week on Monday, market was expecting a 50 basis point rate hike. There was no expectation of rate cut this year. Right now, as you see, the futures have priced in 100 basis point rate cut. The 2-year yield has gone from 5% to 3.7% back to 4%. So I don't think the day-to-day movement of market can be relied upon to see where the yields are going to be. So if you take a medium-term approach, and that's what I take, in my opinion, the federal fund rate, in my opinion, just cannot be over 3.25%. I just don't see how it is going to be at more than 3.5% by the end of the year, because few other things are going to happen. When smaller banks close down, the credit expansion that happens to businesses are going to come under pressure. That may lead to worse GDP numbers. There'll be no basis for Fed to keep rates high. We might be entering into a disinflation scenario by the end of this year. So then what happens? Fed doesn't have to keep the rates at 5.5%. So I see Fed fund rate ending the year in the U.S. at around 3 or 3.25%. So I see at least 200 basis points rate cut by the end of the year. That's my opinion.
We'll keep watching that space. Manish Singh, always a pleasure getting in your perspective. Thank you very much for joining us on this edition of India Tonight. Meanwhile, turning the action back